The next guest warns that the near-term outlook for equities is subdued and thinks that the US is due for a fall. Christoph Riniker has served as head of investment research and asset management at Commerzbank during his 22-year banking career. He's now the head of strategy at Julius Baer and joins me live from Zurich. Christoph, thank you so much for joining us. In terms of what we're going to see, how much of a correction will we see in the next couple of quarters?
Well, basically, we don't expect a large correction seeing in equity markets, but in fact, there are a number of points which let us think that going forward, the markets will more tending like sideways. First, for example, earnings growth momentum, which should further slow going forward, as we see quite high margins. Then as a second point, we see leading indicators faltering on elevated levels, which in the past was always a reason to see equity markets rather tending forward.
Christoph, I was going through your notes and I was wondering whether the fact that we've had a lot of better than estimated earnings figures over the last couple of weeks actually made you prefer some stocks than you did, or some sectors, more now than you did just a couple of weeks ago.
Well, but you have to see with the earnings, it's true that we see positive earnings surprises, but you also have to see the levels of earnings expectations, which in fact were slightly negative from analysts ahead. And now we see from the companies which have reported so far, we see earnings basically just below zero in terms of growth. And so therefore the surprise is positive, as I say, but the outlook is not that great, and in that regard, it's in our view rather wise to be more defensive in terms of a sector allocation than having too much cyclical exposure for the next few months.
How difficult is it? What exactly are you looking at the moment, Christoph, to have an indication of where these equities and these stock markets are going? So we've been almost through the earnings season. You say that actually you're not concerned about ECB rate hikes. So are you looking to what is happening with the Federal Reserve? What did you make of what Mr. Bernanke said this week? And what does it mean for your view on US equities?
Well, in fact, the Fed fund rates don't bother us at all at the moment because we don't see any rate hikes so far in the next few months. So there's no problem absolutely coming from this side. But what's the problem in terms of US equities in our view is generally looking at the composition of the S&P 500, which is quite cyclical. So there are about 57% of cyclical companies in there, and this should be a problem for the market going forward, and that's the reason why we went underweight there.
Yeah, and actually in terms of your regional allocation overview, Christoph, I'm having a look and it's very interesting. You're underweight in the US, you're underweight in Sweden and the Pacific, but nothing else.
Well, that's right. These are the more cyclical markets. That's the reason why we are underweight there, and why we think that in different regions that there is more potential, but on the other side, when looking at our overweights, there are also special factors. For example, looking at Italy and Spain, where we are overweight at the moment, these are more reasons coming from the sovereign debt crisis, which should improve going forward, or at least the perception should improve. So there are different factors for our ratings.
And in terms of the asset classes, what do you make of Treasuries? I know you don't mind bonds in general, but you say avoid any long durations.
Well, yes, I mean, we saw, first of all, we expect longer-term yields to rather tend sideways over the next few weeks and months. And so that's what I was saying in the beginning with equity markets. We don't see any alternatives, also not from the bond side. And that's the reason that we are not too excited on bonds, and that we don't expect equities to fall too much. It's basically a connection of these 2 points.
Christoph, thank you so much. Christoph Riniker there.